China stocks suffered their sharpest daily decline in 8 years as worries mount that the government will pull back on measures to prop up the market. The Shanghai Composite Index ended down 8.5% at 3,725.56. It's the second straight day of losses and the worst daily percentage fall since February 27, 2007. Paul Vigna joins us from the Journal's Moneybeat team. How are you, Paul?
I'm doing all right, Jeff. How are you?
So what's behind this sharp fall?
Well, it's interesting because, you had the Chinese government step in earlier this month and last month after such a big drop earlier. Everyone thought that they had kind of gotten control of the situation. Monday rolls around and you see this huge drop. So now people are trying to figure out, why don't they have control of the situation? And I think that's the really interesting thing is you see the government, you see a lot of the usual moves out of the government, right? They speak through the press. They kind of try to, say without saying exactly what is going to happen. And usually those things work. That's what worked before. But it didn't happen on Monday. And I think what it shows is that you have this, what you basically have is you have a market of people trading. You have a market that is not as controlled, as tightly controlled as they want it to be. That is really, to me, the crux of the problem is that they're trying to stamp out a fire and they're having trouble doing it because all they did was, you had the same thing here. They put a lot of curbs on who could trade, who could sell, what could be sold. They didn't solve the problem. They just tried to put a collar on it. You are seeing now that they're having trouble controlling that collar, and when people get a chance, they are going to sell again.
And these are mostly the blue chip stocks we're talking about here.
Yes, yeah. I mean, these are, and that's an interesting thing too, is what is being sold and who can do the selling. China's markets are not, they're not as tightly integrated with the rest of the capital markets as, say, the U.S. market. It's mainly domestic people who are doing the buying and selling here, and that's kind of the interesting thing when you start talking about what does this mean for the rest of the world.
Right. So, China's obviously a huge economy, but the Chinese stock market, where does that place? I mean, what sort of, global chain reaction could this cause? It's
still a very big stock market, and it matters, but it's not as big in relative to its size relative to the economy size, right? Second biggest economy in the world, not the second biggest stock market in the world. A lot of the other developed world markets, Italy, Spain, the UK, the US obviously, are bigger. And you don't have, again, you don't have the tight connections. You don't have as many foreign investors in Chinese stocks directly as you do, say, in the US market. So the direct connections are not really quite as much there. If you had an 8.5% drop in the Dow Jones Industrial Average in one day, you clearly have a global disaster on your hands. You don't have that same situation. What you do have is you have a lot of indirect influence.
Okay, so stateside, what are the implications for the U.S. market? How are they reacting right now?
I mean, right now, all they're doing, it's almost like a sympathy trade. You see the Dow is down, the S&P, all the major markets are down. They're not down quite as much as they were. You can see the Dow down 108 points. It was down a little more at its worst. The NASDAQ, 0.64. But also, keep in mind, Jeff, these stocks fell, these markets all fell virtually every day last week. So the U.S. stock market was already in a downtrend. Then the China news comes on, and it's more sentiment than any kind of direct effect. The effect of the Chinese sell-off on the global market is going to be indirect. It's going to be through the commodities markets, because China is a huge consumer of commodities. It's going to be through the other Asian markets, which are going to suffer, which do a lot of direct.
And were they all down as well today?
Yeah, they were all down. Okay. I mean, global markets across the globe are down today. So you're going to see it in commodities. You're going to see it in Asian economies. You're going to see it in China's exports. And remember, China has been trying to shift its economic model from export-driven to consumer-driven, to consumption-driven by local Chinese. This is going to affect how much those people are going to want to buy, and that's going to affect how that economy does there. So a lot of moving parts on this one.
All right. All very interesting. Thank you, Paul.